It's never nice to deliver results like that, but you know, we are in the midst of a very big transformation program with the business. And we took some decisions at the beginning of this 6-month period that have caused us to have a negative result, but which have taken us further along our road to our transformation program. And we have this irony, if you like, that our interim results look bad, but in the 6-month period, we've probably made more progress on our entire transformation program than we've made in the last few years. And so it's a story about that. That is important if you want to judge where Pick n Pay is right now.
But you talk about turnover as well being up 5.9% and how disappointing that is. So sales growth has been very, very anemic as well, and you come up with a few excuses about the economy doing this and the economy doing that and all those things that you've just sort of started to allude to. But your competitors seem to be managing despite the poor economic conditions. So there must be something a little bit more to it than, you know, the sort of strategic transformation that you're going through.
Well, the soft economic conditions, I agree with you, that's not the major reason. We are probably affected more than some of our competitors by the soft economic conditions because of the balance of our portfolio of stores relative to the market. The emerging market in South Africa is growing relatively well, and the premium market is doing relatively well. But the heartland of South Africa, which is where we really trade, is really suffering. So we are more affected at the moment by the nature of the soft market than everyone else. But the real issue is not that. It's that this year, at the beginning of this trading period, we took the huge decision to centralize our buying teams. That was a big cultural change for Pick n Pay, and we brought all our buyers from all of our regions into one structure, and we changed the way they were doing business. We could have made a decision to do that slowly, but we made a decision to do it all at once because we wanted to get the cultural change out of the way.
Was there a culture shock?
A massive culture shock, because the company has traditionally been a very entrepreneurial, decentralized business. Our profit centers are our regions, and we've centralized that profit generation function, which is the buying teams. So it's a big cultural change. Now, in doing that, we dropped the ball in many ways, and we've got lots of teething problems. That translated into pretty severe out-of-stock situations in our business during the 6 months. And we estimate we lost about 3.5 percentage points of sales growth because of that. Now, that's not our suppliers who didn't deliver to us. There was a bit of that as a result of our change and them not keeping up with the change. But it was largely as a result of things that we didn't get right internally.
So from a layman's point of view, stuff not being on the shelves.
Correct. Stuff not being on the shelves means you don't sell it. And that had about a 3.5 percentage point effect on our sales growth. If we'd had the same sales growth that we were anticipating to have, in other words, if we hadn't dropped the ball like that, and we had not made the discretionary decisions we made to terminate some of our outsourcing contracts and consultants contracts, we would have probably reported a result in the region of a 15% growth. So, you know, the core trading of the business is okay. There's very defined areas where we've lost margin and profit. But you know, if I look at the decisions that we made, they were the right decisions because we've moved the business substantially forward. We'll mop up the teething problems that we had over the next 6 months with the buying division, and then we'll have a centralized, category-focused buying team in place, which is a huge step forward for Pick n Pay.